Hey traders, Clifford back with another video on trading the charts. So today we're going to talk about one of the most popular patterns in technical analysis, and that is called the triangle consolidation and breakout pattern and how to trade it. So with that being said, let's rock and roll. Okay, so triangles, what are they and how to trade them, right? So basically, the triangle is known as a consolidation pattern, or it can also be a breakout pattern. Let me give you an example. So just so you know, triangles typically they'll form inside trends, and so like here's an example. This is the gold chart that we're looking at here. Um, this is the price of gold, right? So you see there's a sharp move up, and then you get kind of like this little area of just kind of like consolidation, sideways movement, market's not doing much, and then boom, a breakout. Now, that's very common in markets. There's actually three types of triangles you want to be aware of in your trading um, for all of your trades and stuff like that. Now, I really trade the futures market, but technically speaking, you could apply this to any market, even stocks or whatever you're trading. But um, so here's the three types of triangles in technical analysis. You have the ascending triangle, descending triangle, and finally the symmetrical. These are the three most common ones. There may be others, but these are the only three that I've known over the years. So why do we call it an ascending triangle, and how do we even draw that, right? Well, let's take a look. We'll actually draw all three of these so you can see. So so basically you're looking for a consolidation, right? And when you start to draw your triangle, the best way to do it is to use a tool like a trading view right here. So I click triangle, and well, now the thing is, technical analysis, it is a little bit like art. So sometimes you got to be a little creative in your drawings. You know, I mean, you're drawing on the chart and you're trying to find this formation. It takes a little bit of imagination too, but usually if you see it, other traders are seeing it too. That's what I've learned over the years. So basically, you get the bottom of the triangle, and then you get the top of the triangle, and then you kind of extend it out to resistance, and kind of like these support levels here, you want to try and draw them in so they're kind of like in a line there. And why do they call it ascending? Because basically the market movement is moving up to converge to a point where it'll break out in the direction of the triangle. So that's why it's called ascending. Um, Descending is a little different. Where did I have my descending? Okay, here, yeah, over here. So descending is a little different. The market's moving down, but so basically with the ascending, you have a ceiling and you have a upward sloping kind of formation, right? But with the descending, is different. It's similar, just in reverse. So you take your triangle tool again, and you kind of just draw it here. And how is it a descending triangle? Well, basically, it's sliding downwards, um, and then you get the support level, right? So you want to kind of draw. It's kind of like this shape here. You just remember this shape, and if you ever see this on your charts, it's probably a descending triangle. Regardless of the time frame you're looking at, I think it's best to use daily charts because they're the most reliable. But again, you could use other time frames, I guess. I only use the daily normally, but so that's a descending, and again, this is an ascending. And then finally, we have the symmetrical. So symmetrical means that it it kind of like doesn't have a slope yet, and it's just like this. So you take the top of the triangle to the sorry, top of resistance to the bottom of support, and then you kind of like draw it out here. And basically what you're trying to do with the symmetrical is you're trying to catch the slow moving motion before the breakout. Okay, so there you go. 3 triangles. Those are the main 3 that you really want to be aware of. Descending, ascending, and symmetrical. And they call it symmetrical because it really doesn't have it has a slope kind of like on both sides, like a declining slope and an uh, inclining trend here, right? So, all right. So those are the triangles. So the last thing we need to go over is how do we trade them? I mean, it's great to know what they are, but if we don't know how to trade them, it's not going to help, right? So, all right. So how you trade them is pretty simple. Most traders wait for a breakout in the direction of the triangle. So that would be like right here. See this candle, market closed above the triangle. So then you go long at that price, right? And basically, if you go long on the breakout here, you put a stop loss on the other side of the triangle somewhere over here. I would actually sometimes put it like, yeah, like right here should be good. And usually you're not going to get stopped out if it really is a triangle breakout. Um, now, so that's the ascending breakout. If it's a descending breakout, as you see, it kind of worked out with the trend. So, you know, the market went, sorry, the market closed below. So now you enter short, and then you write it down, whatever, right? And you take your profits or whatever. However, sometimes the market will not be this simple. This is very textbook. You never know which way the breakout's going to come. Sometimes the breakout could come to the upside too. And some traders will put a buy order on one side and a sell order on the other. That way they catch whatever direction the breakout is. Um, Especially with symmetricals, because symmetricals, although we're kind of in an upward trend because the market's moving higher, is it guaranteed the market's going to break out to the upside? I mean, no, it could break out to the downside. So some traders will put an order on both sides. They'll put an order on the top side and an order and a sell order on the bottom side. Or they'll straddle the market. They'll buy a call up here or a put down here. If they're doing options or something like that. Or if you're doing futures, you buy like one future here, sell another future on the other side, and then whatever order gets executed, the other one automatically becomes the stop loss, right? So that's one way you could do it. As far as profit taking goes, some traders will measure the distance between the triangle. So here's like 78 points, or sorry, 80 points, right? And then basically you project that 80 points higher, and that's your profit target. Or you could, use another form of exit, but that's a good rule of thumb. So like again, you measure the distance of the triangle here, 82 points. If the breakout's to the downside, you could take profit at 82 points down or 82 points up. It's a good rule of thumb for that. And same thing on the descending here, like you measure the top of the triangle to the bottom of the triangle, 86 points here, and then you measure that down. And as you see, the market hit the target. If it was a breakout in the upside, you'd be looking for it to go there. One last thing I will say about triangles, a lot of times the market will break and then come back and retest the breakout zone. So like let's say you missed you were late to the party. You missed the order here and boom, the market went up. You're like, "Oh man, I missed the move." Well, no you didn't. Sometimes it'll retest that breakout zone and you could even if you're late to the party, you could still get in the trade at a great price and buy right here on the retest. What's another example? Let's see. What is this? S&P. Yeah, see here, like so again, when you're looking at your chart, got to use a little bit of imagination. Um, but I can, after years of studying these, I kind of see them automatically. But if you're new to technical analysis, it might take a little practice before you start to spot triangles on your own. But you will. And as you see, here's the breakout, right? So you're like, oh man, I missed the move. Remember, I would say about 75% of the time, the market will come back and retest the breakout zone. So let's say you missed the party here. Well, you might be able to catch the second party here, the after party, right? Catch it right here. Boom, enter long, and you're still in the upward trend there, right? What's one more here? Let's look at this. So this is Bitcoin. Just pulled this up out of the blue to see if I could find another one. So looking at this chart, yeah, see what I mean? See how like this kind of looks to me like it could be a triangle right there, symmetrical. Some people could call it a flag too. Again, you got to use your imagination a little bit. It's not always going to give you a perfection with technical analysis, but because you are an artist, I mean, that's the fun part too, though. Like you're drawing on your charts, you're creating your own art, your own artwork masterpiece with this stuff. It's like I really enjoy it. But so here you go. So like here, now this is a symmetrical. So what do we do? Well, I don't know which way it's going to break out. Boom, it broke out to the downside. I got my sell order here. I got my buy order here. And remember, if I sell here, I put my stop loss up here, right? So there you go. Oh, here's another one. Look at this. Speaking of Bitcoin, here's another one. Right there, right there, right about, I'm going to say there. And again, I'm not a perfectionist, but so there you go. What did we just say? Sometimes I said 75% of the time they will retest the breakout zone. Look at this. Here's a symmetrical triangle. Boom, Bitcoin breaks out. Oh man, I missed the move. No, you didn't, because if you had that buy order here at the retest zone, you know that 75% of the time the market will come back and retest. Look what happened. In one day, Bitcoin dropped just to retest the zone. If you had your buy order, you'd be in. And then boom, you're in at the right time, and there you go. You caught the nice move. And again, I mean, of course, you know, in in hindsight, it's never, we're looking at the past, so but again, when you see it in the future, oh, here's another one. Here's one more. Look at this. I just spotted another one. So you see, like these, they appear pretty common. There's a descending. That's the descending. Symmetrical, descending, and I showed you what ascending looks like. There's actually one right now in gold. That was the original one we're looking at. This is the real market right now, the live price. And I saw this symmetrical. So like here's an example right here. Like let's say you want to buy gold, or you want to sell gold, whatever, you know, uh, regardless of if you're bullish gold or bearish gold. I mean, bottom line, look, put a buy order right here on this breakout zone of the triangle, and put a sell order right under here on this breakout zone. And then again, whichever one gets executed, the other one becomes your exit. And then just measure the distance again of the top of the triangle to the bottom. There you go, $95. That means this triangle projects that gold will either move $95 up or $95 down. And again, we don't know when that's going to happen, if it's going to happen, but if there is a breakout, there's probably a 90% chance that the triangle will be complete, because I would say 90% of the time, from what I've seen over the years, these triangles do hold their ground. So that's about it for this video. If you enjoyed the video, feel free to like, subscribe, put your comments below. Look forward to seeing you guys in the next one. And as always, my friends, trade what you see on the charts. Trade well.